Thank you for joining us for this exclusive series of discussions on key factors for business expansion to the U.S., created by Bank Leumi USA together with Leumi Israel and Calcalist. This series is focused on best practices for scaling up your business as you expand to the U.S. Supporting tech companies has been a main focus for Leumi USA for many years. We leverage on the strength of our deep global relationship and our presence in New York, Silicon Valley, and Israel to offer access to financial products and services designated for fast-growing tech companies operating globally. As a local U.S. player, Leumi USA is familiar with the nuances of the tech market and its changing trends. Today, I have the pleasure of hosting Team Guleri to discuss the current trends as well as tips and tricks for raising funds in the U.S. Team Guleri is a managing director with Sierra Ventures, a Silicon Valley-based early-stage venture firm investing globally with a focus on next-generation enterprise and emerging technologies. With over 3 decades of experience and over $2 billion of assets under management, Sierra has created a vast professional network, providing a platform for entrepreneurs around the world. Tim is a former serial entrepreneur who also built 2 successful software companies, Scopus, who went public in '95, and Octane Software, who was acquired by Epiphany for $3.2 billion. Hello, Tim, and thank you for joining us today.
Good morning, and thanks for the invite. I'm very excited to be on the podcast this morning.
My first question would be a bit about Sierra Ventures and your strategy around the due diligence process, and maybe if you can also touch a bit about how COVID affected that.
Absolutely, great question. So, our strategy has not changed since the last 40 years that we've been in the venture business. We are investing our 12th fund. We are principally an early stage venture capital firm, which means that we like to be the first institutional capital that comes into a company. And because we're early stage, we're looking for visionary founders with a bold vision that want to build lasting companies. And because of that, we've always been sourcing our investments globally, which is, I know why the topic today is to talk to Israeli entrepreneurs. So that's been a strategy even before COVID. And post-COVID, obviously, we had to make a few tweaks. We were very dependent on local partners in geographies where we physically could fly to and meet these entrepreneurs. And I think that dependence is going to be there till we get out of the current state we're in, where COVID is getting smaller, but it's still there. And principally, we'll just have to wait it out. But our strategy is to work with local partners, find the best entrepreneurs, and then hopefully be that bridge to bringing them to the U.S. and to the U.S. Market and helping them grow.
Thank you. So maybe a follow-up question. What we've seen, I know that you had over 20 investments last year. It was a very good year for Sierra Ventures.
Yes.
And I've seen this, and I think this is a trend in the VC industry globally. We've seen it in Israel. My question is the due diligence process that was done partly virtual last year will change for good? Or will we see VCs slowly going back to their old habits? And one of the reasons I'm asking is because Israel was very quick to reopen. And What I've seen around the VC space is that everyone went back to meeting in person, having that deep due diligence with the team. And I wonder how you see that and where you stand on that.
I think given we do early stage investing, Ori, we are very focused on what we call being prepared mind about the spaces we invest in. And what that means is that well before we meet an entrepreneurial team, we will have probably debated and discussed at Sierra what the best way to invest into a particular space is going to be, because we are very, very focused on B2B infrastructure and B2B technology and deep tech. So being prepared mind gives us the advantage of knowing some nuances of the topic before we meet a team. So because of that prepared mind, approach, we're able to accelerate through the, we don't need to ask the easy questions. we just jump into the deep sort of end of the pool with the entrepreneur to understand what is the specific nuance that they've observed as an entrepreneur on the basis of which they built the company. And it's that ability to kind of go deep, which is actually highly appreciated by the entrepreneur as well, because obviously they're excited by the technology or the angle they've taken towards it. So our due diligence is deep, it's efficient, and it's fast. We've got a very deep bench of 80 CXOs and chief information officers globally that have been part of the Sierra platform for almost 14 years. And we depend on them to give us quick feedback on an idea or a company. And we try to be very efficient and not waste time. And I think that's appreciated by the entrepreneurs. As I always joke when I meet entrepreneurs that, my time is not as important as the entrepreneur's time. So we try to be super efficient about that.
Thank you. So this is very interesting because you're leveraging on a network of connections across the world in order to find that new pipeline and new blood into Sierra. And my question around that is, first, as an Israeli, I must ask if Israel is a geographic focus for you. And then secondly, do you think that relocating to the US as a later step for those companies is essential? Any lessons learned from COVID maybe around that?
Yeah, absolutely. I think, so your first question, Israel is absolutely a focus area geography for us. We've had phenomenal relationships historically with great entrepreneurs. As you and I were talking the other day, our most recent exit was Applitools with Gil, Moshe, and Adam, which has been a phenomenal 5-year partnership during which Gil and Moshe actually moved to the US and built a great company here. And ultimately the exit was also here in the US, with engineering being led by Adam back in Tel Aviv. We've done across a whole bunch of verticals, Ori. In fact, we've got a great security company called Zimperium, which is in the mobile threat infrastructure management, Cortigo, which is a company that is on the industrial connectivity space, and then Regulus, which is another great company that does security for cyber infrastructure. So we really look for entrepreneurs that have a deep instinct about the problem they're trying to solve. They have a global vision of execution. This is very critical because I don't believe, and Sierra doesn't believe, that you can build a very large company without serving the global market, right? And that somewhat dictates when and how you move outside of Israel. So we're not in any particular hurry to ask an entrepreneur to move out of Tel Aviv immediately. I think there are 3 steps that every company needs to go through. The first one is what I call IMF, which is idea market fit. So this is the idea that you, before even writing code, you've actually gone and talked to 40, 50 customers, and you have pitched them a mock or a concept, and you get resounding yes that if you build it, people will come, right? The second is product market fit, which is when you actually sell your first 20 or 30 customers. And after that comes the sales market fit. So the idea that you're actually scaling your sales. The first and the second actually can, I think, very much be done in Israel or in the European market, which is easy to service from Israel. But when you're thinking about the sales engine, given that the US is a pretty large consumer of these technologies, I think some operation has to land in the US. And we're an excellent bridge to provide those contacts, helping you find the most, the best team members in the US, the best partners, whether you're, planting a flag in New York or you're planting a flag in the West Coast. So I think the short answer to your question is that it depends on which stage the company is, and we are very patient on when we ask the CEO or the management team to move to the US.
Thank you. And this is very interesting because some data shows that if we are measuring the success of a company by its exit, IPO or M&A,
then obviously it's proven that the rates of successful exits have been the ones that were here. Although we do see some exceptions of companies that did stay in Israel and managed to present very, very nice results, such as Mobileye or Playtika. But still, we know that's the exceptions and not the rule.
Yeah. I think ultimately, I tell this to all my founders and CEOs that great companies always have many, many options, right? And as you're getting from 10 to 20 to $30 million in revenue or ARR, we many times see our companies getting approached for an acquisition, which was the case with Tools. Again, not to overuse that example. But entrepreneurs that still want to grow beyond that, which many do, and want to take it to the public market, will see many approaches all the way up till they go public. And we've seen that with every successful company we've had. And given that the US has so many acquirers, the likelihood of getting approached and getting a high price is higher if you have a reasonable amount of your operation in the US market. So your odds just get better, which is a good case for having a substantial operation in North America.
Thank you. You mentioned a bit about your value offer for companies, and I know that Sierra Venture is obviously one of the strongest ones within that field after 3 decades of gaining that experience and a network, and also about $2 billion under management. Can you kindly elaborate more about the way that you built value into those companies by your BD and partnerships?
Absolutely. So Ori, I think the biggest thing that I think we offer entrepreneurs is time, which is the time from the general partners themselves. We are experienced people. I think I'd mentioned to you, and we were introduced, that I've personally built 2 companies before I joined Sierra in 2002. The first one took public in '95, and was a great exit after that. And then my second company that I ran and sold for a few $1 billion. And I only say this to tell you that the experience that we have, my partners, Ben Yu and Mark Fernandez, both of who have actually invested directly in Israel as well, we give you our experience, our time, and our contacts, which I think is much more important than the capital. Because capital is a necessary ingredient, but the more important ingredient is time and having that availability for entrepreneurs. So beyond that, which is what Sierra offers uniquely, which is why we tend to do our investments, we tend to do early and go deep with our entrepreneurs. The rest of the infrastructure is what the firm specializes in, because we've stayed focused in B2B and deep tech infrastructure. And there are really 3 legs to that stool. Number one is, as I mentioned a second ago, we've got a very, very robust CXO council. These are CIOs and chief digital officers and CTOs of the largest enterprises in the US. Phenomenal bench. You're welcome to have your viewership. Check it out on our website. And these are not just names. These are relationships we've had for almost 14 years. And every year we have a really good conference in the fall where they fly over and we talk about technology topics. And these folks are great friends of the firm. So they're great guides for our portfolio companies. They'll often tell our companies, build this and don't build that, which is really, really important for early stage companies. And also, obviously, they end up buying product and software. So that's our CXO council, which I think is very, very important aspect of the relationships here offers. The second is we have a deep relationship with Gartner Group, which is, we have a full-time person on staff that actually helps our companies navigate Gartner. And the reason Gartner is important is because they're quite dominant voice in infrastructure. And if you can get them to say nice things about your company, your likelihood for success is much higher. So we have a full-time person that manages that. And then we also have a great marketing and hiring, platform lead person. Her name is Ali Klun, who's with our firm, and she does a phenomenal job of helping market the company here in the U.S. and also give access to the best teammates you can hire when you move to the U.S. So those three things are unique to the platform, and why entrepreneurs just love coming to us early in the life of the company.
This is phenomenal, and as someone that relocated here only 7 years ago, I can definitely attest to how important it is to get some kind of a support ecosystem once you start over. So this is definitely a huge value. And as an Israeli, I must ask, and we can be very honest, you know us, what are the common mistakes that you see among Israeli entrepreneurs that are looking to fundraise? And what are some tips and tricks that you can provide them maybe to create a softer landing and a more successful journey into fundraising in the US?
Yeah.
Be honest.
Of course. So, Ori, I think I'll start with what I love about all entrepreneurs, but I think Israeli entrepreneurs in particular, and I think it's in the water in Israel, which is they have an execution bias, and Israeli founders have great work ethic and just a phenomenal I can take the hill kind of attitude, which stems probably from the military stint that you all are required to do, which is phenomenal to see, because that is a necessary ingredient to win in this competitive race of entrepreneurial venture capital backed technology companies. I think the place where they could improve is number one, having I think of relationship with the ecosystem in two buckets. There's entrepreneurs that are relationship centric. There are entrepreneurs that are transactional centric, right? And my advice always is to skew in the direction of relationship centricity, because ultimately it is that what provides you with access to more capital, more customers, better M&A, all the stuff, because the Rolodexes do matter. To my prior point. So my advice to entrepreneurs in Israel would be that time is your friend. When you start your company, start reaching out and building relationships with like-minded venture capitalists here in the Valley, because all we do is offer our networks for you to leverage. And I think it's not just the Israeli network that you naturally land into when you come to the US, but also the venture capital network, and there are all these sub networks here in the Valley that can be taken benefit of. And I think the successful Israeli entrepreneurs do that very, very well. And I'm seeing more and more examples of that now, with first-time entrepreneurs that come from Israel. And I think if you could do more of that and do it earlier, then that makes it less of a transactional relationship and makes it more of a relationship-based financing. And I love to meet companies well before they're actually fundraising, so that when you fundraise, you do so with conviction. I still joke, and there's a picture somewhere on LinkedIn that I've posted when Gil and I, signed our term sheet. I think it was 3 quarters worth of, kind of meetings and wine and dinners that we'd had. I'd already met and talked to Moshe and Adam, and we actually went to a US-Honduras soccer match, and we signed the term sheet on the way there. These are the stories to tell, and that's because Gil felt like family when we signed a term sheet, and just so happened that he'd reached out to me cold via an email, and we'd formed a bond, and those are the stories worth telling, and I encourage all entrepreneurs to do so.
Yeah, it's definitely a relationship game, and I agree with you that maybe in our very quick attempt to conquer the world, we forget that we need to build it in gradual steps and build those connections and relationship and create that network that will enable you to grow. And thank you for that. Let's talk about the industry a bit. What are the most promising investments and industries that you're looking at, which is your current focus, not just necessarily in Israel, but generally?
Yeah, I think, look, firstly, what I'll say is I think the next 2 or 3 decades is going to be the golden era of tech, because tech was always very dominant, but I think is very clear now, even before COVID, that tech is eating into all the verticals, and it's a global phenomena. And I think as we've seen, the pandemic has actually accelerated that trend. And what's happened now, Ori, is that we've got tech penetrating things that affect us on a daily basis, like healthcare, like transportation, like education, right? And it has become more of a mainstream sort of uplifter of the economy globally. So you're going to see a massive impact and therefore massive value creation from tech-centered startups on a global basis. So I feel that it's just the beginning of a multi-decade trend, and all the entrepreneurs that are in the tech ecosystem should feel really, really positive about directionally where the markets are going. To your exact question, I've obviously been a big investor in cloud infrastructure and SaaS historically as a Sierra. I'm currently doing a lot of work in what I'll call developer computing. So these are developer-led, open source based, products or projects that are servicing the kind of the next wave of cloud computing efficiencies that are being built. Infrastructure as code, which you hear about a lot, or API-led economy. I'm very, very bullish on that because I think ultimately what you're seeing is that everything is becoming a service, and that service is just rendered into the ecosystem via developers. And I think you can build some very interesting companies. We're seeing the first wave of that, which we've seen with Twilio and Atlassian and Datadog and Okta and a few of these very successful companies. But I think you'll see many generations, generation 2 and gen 3 of those kind of companies. I'm also very bullish on voice and voice as it's being decomposed and used for business. There's some very successful companies that have come out of Israel. We've made some investments here in the US. I'm very bullish on that. I'm also very bullish on what impact vision is going to have. So machines that can see and how they automate mundane tasks, like we've done a bunch of investments in robotics. I think again we're seeing the first innings of that, and we're going to see a lot more. And I think that's going to be super exciting to fund early stage founders and see where they can take this.
Thank you, Tim. And maybe following up on that is we are seeing that the golden era of tech, and I think a lot of investors are seeing that the numbers are up the roof. I think only in this Q1 we saw $70 billion dollars invested in VC-backed companies, and we see VCs raising significant funds. I think it was above 33 in Q1 compared to 80 in all year last year. 50 companies just listed for IPO. So something crazy is happening, and we are seeing also an increase in valuations. Where do you stand on that? What do you think is the most best way to weather this crazy situation that we're seeing right now in terms of valuations and investments?
Yeah. I think that's those numbers are staggering, Ori, for sure. I think look, I think 2018 was 69 billion was raised, and then I think 19 was a little lower, and then 2020, we were back in the 69, 70 billion raise. But what's more important is the exits in 2020, by the way, which was a pandemic year, was in the tune of like 290 billion or something. So you can just see why dollars are pouring into this asset class, because it's producing outcomes for investors. And as the public markets have been sort of tepid over the last couple of years, you're seeing a much larger dollar influx into the venture ecosystem. And I think the fundamentals are very strong, to the earlier point I've made about the digitization and the fact that technology is becoming mainstream and verticals that it had never touched before, like healthcare and education, but two that we pointed out and talked about. So with more money comes obviously more funds. With more funds come more competition, and therefore valuations tend to jump. Look, what I tell entrepreneurs is two things. Number one is build a company which has got a very smooth curve of valuation upticks, and the reason for that is that when you're taking on a brand new investor in a Series A or a Series B, that investor needs to feel really good when you raise your Series B, and the B investor needs to feel really good when you raise your Series C. So don't do herky-jerky valuation attempts or raising money at valuation just because the market allows you to do so, because you're doing yourself a disservice as an entrepreneur, and also putting undue pressure on the business when none is needed, right? So grow your business and your fundamentals and take adequate capital at every stage and let the valuation come to you. That's point number one. The second is build an efficient business. The best fundraising you can do is actually from your customers. And I have a company that just went unicorn a couple of weeks ago, and now this entrepreneur has raised $100 million, but the total dollars to get to that mark were only about 15 to 17 million dollars consumed by the company to get to a $1.4 billion valuation. And that's a real company, and that's worth celebrating. And I think we should never forget that, independent of how much money is available in the ecosystem. And to your valuation question, Ori, I think, look, we do early stage investing, so we're somewhat under the turbulence, if you may. So we don't see too much of backlash up and, back and forth, but Series B and Series C investors are seeing a lot of crazy valuation jumps, and it's becoming hard to defend the math, honestly, because valuations are being awarded to companies. You're doing just single digits in revenue, and these are many hundreds of thousands. And I think that party will stop because it's not sustainable. So I tell entrepreneurs that don't get distracted by that. Build your business using fundamental metrics and get the best partner, because capital is not what you should be after. You should be after relationships and experience and connections. I think entrepreneurs that are relationship centric and not transactional centric understand that. And those are the ones that we seek out at Sierra, and those are the ones that we end up partnering with. So, and by the way, there's no right or wrong. Some entrepreneurs like to be transactional, and there's been plenty of people that have been successful in that route. That is just not the route that we seek to walk on.
I appreciate it, and thinking about that discipline and knowing where your North Star is, because it's a journey, it's a marathon, and obviously not a sprint. So I think that the success of Sierra definitely presents that this disciplined approach is the one that's taking companies to very meaningful success. And the last question that I will ask, because I know that we're going to get a lot of requests around that, is what is the best way to connect with you? Is it through your network within Israel or directly within the US?
I think I'm very approachable. I'm pretty 24/7 I remember that we service entrepreneurs that, are working 24/7. So I work the same hours. And I'm very reachable. You can DM me certainly on Twitter or drop me an email. I'm tim@sierraventures.com. And I do have a 48-hour SLA to return your email. And I look forward to these conversations because ultimately these are long-term relationships. I do want to point out maybe as a parting comment that in the venture capital, sort of analysis, we often talk about the power law, which is power law is the fact that of all the thousands of investments that happen every year, there are only about 2% that drive, 70 to 80% of venture returns, right? So if you remember the math, if there was $290 billion of returns that happened in 2020, of all the investments that happened in 2020, and there were about 10,000 companies that were funded, only 2% of them actually contributed principally to this outcome. And you want to be in that 2%. So the common theme in those 2% is these are very purpose-driven founders. They build fundamentally strong businesses, and they're global thinkers, and they choose their partners, very, very well. And partners that have passion and expertise to build these companies over an arc of time. And I feel that that's something one should never forget, that because the math is the math, and the power law is very, very strong, and you want to be in that 2% as an entrepreneur. So you should study what are the attributes that get you into that 2%, and practice that, because you'll be building this company that you're working on over the next 10 to 15 years. So make it count.
That's definitely a great way to end this fascinating conversation. And thank you for providing all that, I would say, tips and very, very valuable knowledge for those Israeli entrepreneurs that are thinking about their next step as they expand their business to the U.S. Thank you, as always, for the partnership. It's been a pleasure.
Absolutely, my pleasure. We're open for business, and I look forward to meeting the next great entrepreneur from Israel. Thank you.